Welcome back, ladies and gentlemen. Thank you so much for still remaining with us on Smart24 TV. My name is Anthony, and I'm with Victor Chiveru. We are giving you a fresh touch into what is currently trending, what is happening in financial markets, both regional and global. But we are more interested in our own here, first and foremost, because we have a great job to do, and that is promoting investment within our local markets and growth within the financial markets here in the region. And we've just looked at some of the given performances there from MTN Uganda for the 9 months leading to September 30th, and the dividend yields that are expected from that particular period, as we have mentioned earlier. We've also mentioned, of course, about Cipla Quality Chemical Industries, which has, of course, has been given a green light by the Comesa Group in as far as the acquisition of 51% stake stands for Africa Capital Works. Now, let's look at the bottom losers. What do you have for us, Kibiru, when it comes to the bottom losers here?
Now, fixing our attention on the flip side, we are seeing we want to highlight that we are seeing mostly cross-listed entities. But particularly today, we're going to shine some light on KCB Group, and just to see its recent behavior on the market and how it is treating investors particularly. But just for numbers, KCB Group actually closed at 452.51 share price, and it closed its last trading day at 1,503.12 Ugandan shillings on the Uganda. And KCB began the year of 1,144.50 Ugandan shillings and has since lost a staggering 60.5% of that price valuation. This is obviously ranking it 16 on the Uganda Securities Exchange in terms of year-to-date performance. And let's not forget the exchange already has only 16 listed companies, so we're looking at the last player as we speak. So shareholders' worries are actually compounded by the fact that KCB has lost 14% of the stock's value from October 3rd to date. But shifting our attention to how investors are really being treated by these cross-listed entities' poor performance, we are looking at a story, what exactly happened yesterday with the cross-listed entities leading to a 2.2 trillion Ugandan shillings loss for investors. Anthony, could you please throw some light?
Yeah, well, cross-listings have actually been some of the biggest losses that investors have encountered on the Uganda Stock Exchange. Now, at least as per the reports, the losses have been largely driven by a drop in the market capitalization of 5 cross-listed firms, including Centum Investment, East African Breweries Limited, Kenya Airways, and the notorious KCB and Equity Bank Limited. Investors in cross-listed companies suffered at least 10.5% revenue losses in 2023, the second quarter, which is equivalent to 2.2 trillion Ugandan shillings, according to the Capital Markets Authority data. The loss mainly was also driven, like I mentioned, by the drop in market capitalization.
And looking at the persistent downward drag on the Uganda Securities Exchange, it is indeed increasingly agitating investors. And this is for those who are in search for liquidity, and it has been difficult in a region whose stocks are actually largely dominated by institutional investors. And this is actually mostly those who hold on to their stocks, thus making the market relatively inactive.
And that's exactly where we are headed, Victor, for Airtel, if this actually continues to happen. Like we mentioned in our earlier story of Airtel, NSSF's acquisition of 50%. It's good news for Airtel, not good news for retail and local investors. As you can see on the case of cross-listing, most of these companies that are cross-listed are invested in by big institutions, and that leaves the local investors actually locked out. and these stocks don't actually liquidate within a very long time. I can tell you the last time Centum, which is the only stock that I know of that is cross-listed and has had some activity, has actually been last year. They traded 100 shares last year around August. And in this entire year, you're still standing on 100 shares volume. In a whole year, I mean, what kind of stock is that? What would it be if a person really invested and they have run into debt and they're looking at liquidating that kind of stock? Where would they run? Nowhere, right? Now, when you look at these counters with the biggest market capitalization on the exchange, and therefore any slight volatility that happens to these companies does largely affect Uganda Securities Exchange valuation, according to Mr. Devin Calvin Bateme, who is a researcher at the Crested Capital local broker. When you look at, however, companies that are across East Africa, they have been seeking to bolster their funding by cross-listing their counters, despite the poor performance of these counters.
Well, the volatility actually in regional markets has not worked for Uganda, and this is because investors continue to lose substantial sums of money in cross-listed equities. So the Uganda Securities Exchange is currently facing challenges to maintain a sufficient number of active counters, given that many counters have not returned dividend payments in the years, and we're already noticing that so most of the companies are getting pressured to release dividends that they haven't released since the last wave of COVID-19. But 10 locally listed companies have all declared their dividend position for the year ended 2022, according to Crested Capital, which in some way has fostered some liquidity in market and of course improved shareholder returns, especially for stockholders in Umeme National Insurance as well as Stanbic, and of which Stanbic isn't exactly in a scary position.
However, investors' returns have also been wiped out due to low revenues returns, especially from the DFCU and Uganda Clays Limited, which dropped by 54.92% and 5.53% respectively during the period. Data still from Crested Capital stockbroker indicates that domestic market capitalization, however, withstood the volatility to increase to at least a value of 7.59 trillion by the close of Tuesday, from 7.3 trillion Ugandan shillings in June, due to a significant growth in 5 locally listed counters, among which include MTN, Stanbic Uganda, British American Tobacco Uganda, and Umeme.
Well, the changes in market capitalization are drawn from changes in the prices of domestic counters. So many counters have actually registered declines in price, while those that have recorded increases have not been significant to drive desired growth. And actually, volatilities in the region have seen investor wealth on cross-listed counters declining, with Uganda registering a drop of 23.13% in the first 10 months of 2023. So this is all happening while Kenya is registering losses of 12.2% on the Nairobi Securities Exchange, showing that these cross-listed entities are actually causing a two-way damage.
However, stocks in Tanzania gained by 10%, and the local indexes in Rwanda also gained by 3.46%. Some lessons to draw from these stock exchanges, Victor. I don't think we as Uganda can actually have a comparison to Rwanda. When you look at Rwanda, most of the stocks there are cross-listed. Very few stocks are domestically listed, and their market gaining at least 3.46% in the local indices. That shows you how much work we really have to put in. Kenya, Tanzania gaining by 10% is also a sign that they're making strides. And this is exactly what we also need to do at the moment. But companies, when you look at cross-listings, companies do cross-list to find new investor bases and increase their ability to raise low-cost equity financing from a large pool of potential investors. Now, cross-listings also help help to improve market liquidity and lower the operating costs of investors and lowers obstacles to foreign investment that stem from the control and lack of sufficient information.
Well, this eventually increases these companies' overseas sales since potential customers abroad become more aware of the performance of the company, and this is obviously through their share trading. But research indicates that there is actually a trade-off when it comes to listing a company abroad.
Now, stock returns of listed firms are volatile and vary depending on the factors such as macroeconomic factors, variables that are specific to a given firm, like the earnings price ratio. This is the term usually when you have the earnings and then the price, and you get the ratio there, and then the book to market equity and leverage ratio market, and firm size, and of course market beta, and other factors like prices of oil, market consumption, market index, and term structure risk premium, inflation, as well as production in the industries. That is according to a 2022 research paper from Kenyatta University about cross listings performance within the region.
Actually, Anthony, more insights from that paper from Kenyatta University. The paper actually further notes that because there is no cheap stocks in the region market, excess returns cannot be generated. But every investment actually carries some risk, and in order to optimize profits, investors must sell high after purchasing low. The researchers actually noted that.
KCB, Nation Media Group, Equity, Centum Investments, Kenya Airways, and East African Breweries are the few cross-listed stocks businesses that are shared with Kenya. The limited quantity of cross-listed shares available for trading has negatively impacted these firms by causing a decline in the activity on their counters. Investors are also being negatively impacted by the variations in the growth of regional stock markets. So manual settlement processes and the presence of multiple currencies pegged to these markets also come in as major points of focus. But due to the fact that the majority of these stocks shareholders are based on their primary markets, this actually hinders large trade in secondary markets such as Uganda, stalling liquidity. But because of scarcity, traders are actually not trading, and although analysts point out that this can be fixed by automating trading infrastructure, and of course doing so is bound to enable smooth trading. Wow. That's it from the cross listings. Of course, we hope definitely there will be better performances from these. But like the research notes, there's always going to be a little bit of illiquidity on these ones on the secondary market as far as trading is concerned. Now, moving on to another story in the same manner, the Bank of Uganda released in conjunction with the Uganda Bureau of Statistics that there's been a drop in food prices, forcing a decline in inflation to at least 2.4%. A drop in prices of maize flour, the sugar and rice, among other commodities, continue to drive down the headline inflation, declining to 2.4% from 2.7% in September. Well, data from the Uganda Bureau of Statistics, or UBOS, yesterday indicated that maize flour registered a negative inflation of 23% compared to 3.8%, while rice inflation fell to 0.2% from 5.2% in September. So while representing the Consumer Price Index in Kampala yesterday, Mr. Edgar Niyimpa, the UBOS principal statistician price statistics, said during
during the last 1 year, the sugar inflation had fallen to 16.3%, while rice and silverfish had dropped to 0.2%, and we saw a depreciation of 10.7% from 5.4%, signaling a general decline in commodity prices.
During the period, the core inflation as well dropped to 2% from 2.4% in September. That's contributing to the overall decline of the general inflation outlook, which is currently far below the central bank target of 5%. Now, the core inflation index actually indicates the inflation minus the data from volatile commodities like fuel and oil prices and food as well. And these are usually much more volatile. So even the core inflation had to decline, and this drove the general inflation, which is known as the headline inflation, downwards as well.
But actually, looking at the electricity inflation, it also dropped by 1.4%, while water charges in terms of inflation also rose to 13% compared to 9.7%. This was following, of course, increase in water tariff. And looking at the diesel inflation, it increased 3.8% from 3.4% in September.
However, the services inflation increased to 2.2% compared to 1.6% due to especially education service inflation, which increased to 6.1% from 3.8% in September. Mr. Niimpa also indicated that inflation had slowed down due to a drop in food crops and related items inflation, which dropped to 6.6% compared to 7.9% in September as a result of fresh cassava prices that dropped at negative 6.6% from 6%. Green cabbages as well dropped as well, registering inflation of 10.8% from 0.2% in September, while Irish potatoes at least dropped to negative 0.9% from 4.1%. As I said earlier, the energy fuel and utilities inflation increased to 2.2% compared to 1.2% due to volatility in fuel prices, which saw petrol increase by 1.8% compared to 8.4% in September. Yes, and you've seen the fuel prices as well on different charts actually go up. I don't know how you're taking that, Victor.
For the fuel, I don't think Uganda as a nation has anything to do. Like the inflation, of course, it affects everything, but the problem all rises from fuel. As the fuel goes up, everything that follows it has to go up in a way. But we somehow do not have control over fuel prices. So we are also spectators. And the state of fuel as per now is determined by the distributors. So it's all about just keeping a keen eye and seeing the news coming from those nations and to see and wait and see how it's going to affect the Ugandan markets.
Do you think the Israel-Palestine war has something or anything to do with the current increase in fuel prices?
No, it doesn't, because just a few weeks back, the major oil producers in the Middle East sat down and deliberately decided to cut oil and fuel, or actually cut fuel consumption by a whole 8 billion barrels. So that had to bring the fuel prices up due to the slight development in scarcity. And as we do not really have a clear reason as to why a move like that was made, we still had to face its effects. And not until they decide to take the fuel, the barrels, the production up again, we're going to stay in that particular situation.
What this history, when you look at fuel prices and wars, there's always a relationship. When Russia-Ukrainian invasion happened, we saw prices going up. and then when the war was easing a little, prices dropped. You remember there was a time when the fuel, a liter of fuel cost 7,000.
Well, the prices were affected with that particular war because Russia has one of the biggest, it actually comes up as one of the biggest fuel consumers. And looking at a war like that, there was a lot in play, and a lot of fuel, of course, was needed for operation of all those things. But the US itself being against Russia's involvement in such acts, they had to look for ways of influencing like a stoppage to that kind of situation. And I do believe that the fuel prices being cut came up as a reaction of the Middle East countries from the US's slight involvement into trying to stop or minimize the damage that was already in play. But particularly for this one, we're already looking at two Middle Eastern countries operating, and by the way, these two countries produce fuel of their own. So looking at a war like this one, fuel prices are not supposed to be affected as largely as everyone expects.
Wow, that's a very whole interesting story, because as much as we are talking about financial markets, investment, but if prices are high out there, at the end of the day, our investors, our viewers will have less money to put aside for investment. So this is very important data and relevant for you as an individual, as an institution, as an investor, because you need to know what is happening in terms of the pricing of goods and so on. All these affect, first of all, how your companies are doing. They affect the cost of doing things, the capex of all these other companies, and that affects how they're actually going to be making profits, and eventually your dividend will be affected. So as an investor, you need to follow up with most of these pieces of information and get to put together your research as an individual before making decisions. We are going to take another quick breather, ladies and gentlemen. When we return, there will be Gloria on set as well to give us a little bit of Nairobi Securities Exchange and the rest of Africa, Johannesburg and the like, and maybe go into as well the cryptocurrency markets as well, and the United States markets as well. Thank you still for staying with us on Smart24 TV. We take another quick breather. We'll be right back. Do not touch your dial.